Hi everyone, I want to welcome you here today. We're joined by Jim Paterno of Stockton Real Estate Advisors, the founder and CEO. He's been very successful throughout his career and he's a fantastic communicator and fundraiser and a good friend. So first of all, thank you very much for joining us.
Thanks,
again.
Graham.
So I guess first of all, just bring us up to speed. How is business?
Well, it's been an incredible time. It's been a really fluid time for us in the real estate business. We're investors and advisors to other owners and users of real estate. So for us, we've been extremely busy on the property management and advisory side, helping our clients deal with the effects of the pandemic and trying to create safe environments for all of our tenants as owners as well. So it's really been quite a trying time.
And have you been working in the office yourself?
We have been in the office for the last month or two. As an essential company to help manage properties, it's important for our staff to be available to our clients and to be ready at a moment's notice to help if there's an emergency or catastrophic experience within a building. So we are typically there, and I'll tell you, it's been great in terms of team spirit and camaraderie. We are doing all the right things in terms of social distancing and being extra cautious, but there's nothing like being together with your colleagues.
Exactly, I completely agree. I know that the Nth Round team misses being together, so I envy you. I know that you're working on some new projects, so do you want to tell us a little bit about that?
Yeah, from the investment side, it's an interesting time. There's this balance between trying to time the market appropriately and be patient given the world in which we're living. We are looking at a number of different investment opportunities that encompass both kind of what we call core, which are very solid, almost bondable type of deals that are very high performing, to more opportunistic, which means that we're going to try to take advantage of and capitalize on the dislocation in the market. So some of the things that we're looking at range from the life sciences industry, which of course in Philadelphia is a very robust and growing market. And we have a big presence in University City with a number of projects already, so we're looking to expand upon that. And then we're also looking at some core assets that are occupied in kind of a sale-leaseback arrangement with very high credit tenants. So we're very active in analyzing deals. The real critical question is, at what point do we act upon those deals and find the right sweet spot for capitalizing on a dislocation?
So I'm hoping you can tell us a little bit about fundraising, equity raising, and your process for doing that. Is that something that you rely on a network of yours or word of mouth? How do you go about finding investors for new projects?
So we've been really fortunate, having had a very long career in the business and being part of the fabric of the community in Philadelphia for 35 years, that we have been, in the last few years, sought out by a number of investors, both institutional and high net worth. So typically what will happen is we're contacted by groups that are interested in what we're doing, want to get informed about the market, want to learn about opportunities and what we're seeing in our perspective. And then beyond that, of course, we reach out to new sources of capital, both within the Philadelphia region and outside of this market. Family offices and institutions are growing increasingly interested in the Philadelphia market, particularly because of the cell therapy industries and the life sciences industry. So it's not uncommon for us to aggregate support and investors from both known entities and from new entities.
So it is a combination of individuals, high net worth individuals, and family offices and institutions, it sounds like.
Yeah, we have a real range of projects. So right now, as an example, we're working on just completing a small project at 40th and Chestnut Streets, which is in conjunction with University of Pennsylvania. It is actually Penn-owned land, and we long-term master leased a number of structures to create small retail and then 12 micro furnished apartment units. And so in that case, we have high net worth individuals that like the story of University City and the gateway into that marketplace. And we've been really successful in just having recently signed a restaurant lease and a Chase Manhattan Bank branch location and an operator for those 12 units. So in that's an example of where we might have high net worth individuals. On the flip side, having purchased a property at 36th and Market, which was formerly owned by Children's Hospital of Philadelphia, that was more of an institutional long-term play with a great credit tenant and an opportunity to expand the retail footprint and create additional value, and that was done with an institutional investor.
When Stockton goes out to raise money, do you distribute documents, or how do you actually go out to investors and let them know about new opportunities and attract this capital in a way that gives them security and also excites them about the future of that opportunity?
So typically, my team at Stockton will start to socialize an opportunity. And we'll start at a very high level, high altitude, which is talking about specific market trends and what we're seeing in the market relative to a certain asset class. So life sciences, as an example, is something that we've been very focused on for the last several years, and that led to our first investment at 36th and Market. But so from that high-level socialization aspect, we start to gauge interest. We start to bracket who may or may not be interested and at what kind of price point. You know, in the kind of higher-end real estate investment world, there's a slug of equity that's required. Typically, Stockton is acting as an operating partner, and so we're bringing some of that equity in ourselves, and we're performing all of the acquisition due diligence, the leasing and management due diligence, and the operating due diligence. And we're putting some equity in alongside certain investors. So depending on the size of the transaction, we may then, as we socialize that, we'll start to identify whether or not we need, you know, X millions of dollars or X hundreds of thousands of dollars. And at that point, we'll start to gravitate towards those groups that seem to be more focused on what we're trying to do. From that point, we get a little more formal with offering memoranda that will kind of provide a very detailed outline of the financial aspects, the investment thesis, the expected or anticipated rates of return. And if we start to get more interest, then we start to circulate documentation. Now, with repeat investors, it's great. We have existing documentation that we can utilize. If we go to a larger institutional investor, they often will dictate the terms and the documentation that they prefer to use, which is fine by us as long as we're capturing the key elements of the transaction and the roles and responsibilities and the ratio of investment, then we're fine with those documents.
Right. I think that's probably one of the luxuries of having the track record that you have, is that there is that credibility already established, and there's less needing to be buttoned up and showing that through memorandums and things like that. I know when we talk to earlier stage companies, that's not a luxury that they have, so that's nice.
Well, we're fortunate in that I have a great team in place. Our acquisition talent and our leasing and management talent is really second to none. We all have institutional kind of pedigrees and backgrounds, so we choose to work together in a more entrepreneurial environment. As a result, the quality of the information that we are collecting and analyzing is I think, exceptional, and so that's really helpful as it relates to our prospective investors. They have a great deal of comfort in knowing that we have that track record, we have that experience kind of behind us.
Right. So switching gears to your existing limited partners, the investors that you have for existing projects, what's the relationship that they have with you after the investment is made, and are they reaching out to you, or are you more proactive in terms of keeping them up to date on their project? We
have a very nice relationship with all of our investors. It's very casual and comfortable. So it's a combination of, you know, the freedom and of reaching out in both directions. So we typically try to make sure we're contacting everyone at least monthly, just via phone calls or around the golf or a socialization of some type. Obviously, with COVID at this point in time, it's made it a little more difficult to do the face-to-face. But certainly between Zoom calls and regular phone calls and email updates, we're connecting. The Nth Round platform has been hugely helpful to us in terms of pushing out information on a regular basis, and our investors have been super receptive to that because at 24/7 they can access information and know they have a central repository for all of their documentation. So that's been really helpful too, and they've all really appreciated that next step in our growth.
That's great. Well, that's really great to hear. That was another thing that I wanted to ask about was in terms of documents and reporting that needs to happen after the fact. How frequently do you post documents, and how sensitive are those documents? Do they need to be put behind a vault and key, or how did you distribute those documents before versus how you're doing it now with Nth Round?
So typically we are providing quarterly asset updates for each of our investors, and those are written reports that provide high altitude overview of the asset class, the performance of real estate generally in a specific market in which we're invested, and then starts to drill down to the performance of the asset within its subset and just against the pro forma and the projected income that we had anticipated. The level of reporting will become more and more detailed depending on where we sit in terms of that asset. So in other words, if we are ending a life cycle or thinking about divesting of that asset, then we really start to compare a lot of detail against our original pro forma. The Nth Round platform has been hugely helpful for us because there is some sensitive information that is related to either tax returns or individual investor distributions that historically we have been emailing that, and now we've got a secure site for our investors to access.
Right. And in terms of tax reporting, I know that that's an important time for our clients and obviously for Stockton as well. Is K-1s and all of that, that's personal information, right, with investors' names on it, and that's something that needs to stay highly secure, right?
Absolutely. K-1s contain anything and everything that a nefarious individual would want to see. So making sure that we have a secure method in which to transmit that information, and importantly for our investors to have a centralized location in which they can access not only the current K-1 but historical K-1s and other information is helpful. I know as an investor myself, I tend to not be as disciplined about keeping things in files. So knowing that I can just go to my Nth Round site and see everything at one time is hugely helpful.
So I know in the past we've talked about at Stockton having an engaging and interactive experience for shareholders. Do you feel that Nth Round has helped you to kind of create that for investors, and do they feel a more sense of security having that kind of platform where there's everything in one place?
We're excited about the initial response. As you know, we're kind of relatively new to the Nth Round platform, and the initial response was exceptional. So every one of our investors had a very positive experience with the interaction and the interface and the quality of the site, the ease in which they could navigate and access their information. And they were really excited that we took the initiative to create that platform in conjunction with you for them. I think as we move forward with our quarterly reports and our additional reporting, it's just going to strengthen our relationships with each of our investors.
As opposed to a more SEC-regulated real estate company, I know that Stockton enjoys some of the benefits of being in a more private environment. Can you talk to us about what are the benefits for Stockton of being in that private environment?
You know, there's the latitude as a private investor to be much more entrepreneurial and to capitalize on shifting market trends and to kind of look into the future and not be sticking with a certain asset class or a certain return profile. So that it's tremendously valuable to us as a company to be able to have that flexibility. That being said, I think our investors really like to see structure. They like to see transparency. They like to see a reporting that's seamless and thorough and disciplined. and Nth Round provides that credibility and that structure to what we do. So it's very important as the markets shift and as the economy becomes very quirky and choppy to know that our investors have the confidence in the quality of the reporting that they're getting.
Do you think that using the Nth Round platform provides a competitive advantage for Stockton Real Estate Advisors over some other real estate firms out there?
There's no question that the Nth Round platform provides a competitive advantage, and it distinguishes us from many of the local operating partner investment platforms. It provides a greater level of discipline, transparency. It's much more seamless for our investors. And in this time of economic uncertainty, being as institutional as possible and providing an institutional forward-facing platform is extremely helpful in providing a level of credibility and comfort with our investors.
Jim, I want to thank you very much for joining us for this and for being a customer of Nth Round. We really appreciate you. So thank you so much for being here with us.
Well, you're more than welcome, and it's been a fabulous relationship. I have to tell you that your team has been extremely proactive and responsive and have been creative in really addressing the specific needs of our company and the real estate industry in general, so we really appreciate the relationship.